warm welcome, everyone, to the expert panel discussion on a very important aspect: digital identity, privacy, and the financial sector. We have with us the experts, Mr. Anu Tiwari, partner, Cyril Amarchand Mangaldas, Mr. Arun Prabhu, Director Public Policy of the same institution, Mr. Thomas Abel, Chief ADB's Digital Technology for Development Unit, and the session will be moderated by Mr. Arjun Goswami. Welcome, panelists, to this panel, and over to you, Arjun, for taking it forward.
Thank you very much, Rushi. And first of all, very special thanks to Indian School of Business. You're a storied business school. You've kind of transformed the landscape of business school education in many ways, and it's a hallmark of the kind of things that you do, that you've put on this kind of conference, and we're really delighted and pleased to participate in it. So I'll do although the profiles have been put up, let me just begin with a small introduction of the people who are on the panel. I'm a Director of Public Policy in Cyril Amarchand Mangaldas, but let me start with my friend and former colleague in the Asian Development Bank, Thomas Abel. If you haven't heard Thomas before, it's a treat. I mean, he's spellbinding when he speaks about matters of digital technology, and I remember being spellbound the first time I heard him. He has very wide experience of the digital technology space in the private sector, and he's now leading the charge on digital technology policy developments within the Asian Development Bank, so multilateral development bank of the region. Next to him, at least on my screen, is Arun Prabhu. You know that it's Arun Prabhu when you hear him speak about matters of data privacy, the Aadhaar judgment, and matters related to that. He is the head of the firm's media and technology practice, but he writes very extensively, he consults very extensively. He is known in industry bodies and within government. His span of work really extends to new emerging areas like online gaming. And when you listen to him, you'll have a sense of deep technical expertise. This is not 5 minutes flash in the pan stuff from Arun. Last but not least, a very special colleague of mine. I mean, Arun is a partner in the firm, but so is Anu Tiwari. Anu Tiwari is our partner who heads our fintech practice. He's a member of a number of industry bodies, CII. He sits on both RBI and SEBI working groups and committees. The range of his transactional work spans both Indian and multinational companies. So he has a real wealth of experience in the fintech space. Between us, what we hope to do in this session is take you through three things, and these three things are interconnected. They are the issues of digital identity, know your customer, and data privacy. And you might say that the issues are really two sides of a digital coin, because what we will discuss are the potential benefits that digital identity can bring, especially in the financial sector, but then the need to look at issues related to data privacy and issues related to compliance and know your customer and how to achieve that balance. And I think that we will all try and speak to particular topics. I will maybe start by speaking to digital identity, and then I'll turn to Anu Tewari to take us through the aspects which go building off the bedrock of digital identity to how we should deal with issues of KYC in a very fast changing financial sector landscape. And then we'll turn to Arun Prabhu to take us through the newest developments that are happening on data privacy and how those should be addressed. Before we turn to Thomas Abel, who I hope can give us a perspective globally and regionally as to how different countries are managing this balance, because we're not alone in India in terms of trying to deal with this balance. So I thought it best for me to begin, and not because I'm taking the moderator's privilege, but because we should leave the best for later, right? And so, let me start by giving you some thoughts on the bedrock issues related to digital identity. So I think we have to begin maybe with what we mean by digital identity. And I think one good start point for it is to look at how the ITU, the International Telecommunications Union, looks at digital identity. And it regards digital identity as really the digital representation of an entity, detailed enough to allow that individual to be distinguishable within a digital context. There are many definitions of it, but I think this one is a pretty good start point to what digital identity is. And digital identity as a tool allows for public services to be provided, for access to be provided, for efficiency of services to be provided. But it depends on a series of attributes. So those attributes are fourfold. They are birth-related attributes. So it's your name, your date of birth, et cetera. It's descriptive in terms of height, weight, and so on. Personal identifiers. So if you have a social security number in different countries, and biometric data, that's typically fingerprinting, DNA, and so on. And there are many different ways in which it can be used, but that's the fundamentals of it. If you look at some countries, the way they've used digital identity is really quite startling. And in the research work that we did when we looked at digital identity, we found that in a country like Estonia, 99% of their citizens have an EID. And they use that EID to access all sorts of services, bank accounts, online medical records, etc. In other words, it's the gateway to all these different services that individuals want to use, both in the public sector and in the private sector. That's how powerful a tool it can be. It is true that digital identity, which is such a powerful tool, can also be the subject of a lot of criticism. And it may be invidious to pick out individual cases, but just to illustrate the point, when digital identity was launched in Australia, there've been huge criticisms because people have been concerned about lack of security. They've said that proxy, malware, etc., can access it. So there's been a really furious debate in public policy circles in Australia about it. So it's just to give you sides of the coin. But let's talk for a moment before we get too far into this. What kind of benefits could digitally in the financial sector, given that it is a 24/7 convenience and it can reduce costs sufficiently, can drive inclusion and service delivery. Those are general benefits, but if we were to apply it to the financial sector, here are some things it can do. I mean, all banks need to market information. All financial services entities need to market information to their customers. Well, if they have this kind of digital identity, their ability to tailor their product to a customer profile becomes much stronger. So you start to get efficiencies in the way in which things are marketed to you. Now, all of us have been subject to multiple marketing, right? We get, other than that kind of chaotic marketing, you can have something which is more streamlined and more to your benefit. The second thing is that KYC can also bring significant business benefits. The reports that have come out from consulting firms like McKinsey's suggest that anywhere between 3 to 13% of your GDP can be unlocked if you really deploy digital identity fully. And on the other side, the same McKinsey report talks about a 30% reduction in transaction costs. Why does McKinsey say so? Well, it says so because they went through the records of call centers operating on behalf of banks, and they found that 30% of the calls that were being made to those call centers were because of misplaced or forgotten passwords. So it's a way of reducing all that kind of friction. And of course, we're all concerned about the next billion users and financial inclusion. So those are some of the general benefits. But what about the benefits in the Indian financial sector in particular? Well, as Anu and Arun will hopefully go into more detail on this, I'll only touch on it. We in India have what is called the Aadhaar. The Aadhaar has been launched by the so-called UIDAI in 2009, and it has achieved significant impact. There's been a substantial increase in the number of financial accounts, somewhere from 48 million to 138 million in the course of a year between 2016 and 17. And there have been cost reductions per customer from about $5 a head to about 0.7. So significant things, and yet huge opportunities yet ahead, because as we know, large parts of our population are unbanked. There are large parts of our population that are migrant, and there are large parts of our population that still depend very strongly on public services. Now, there are issues with regard to Aadhaar, and I hope that Anu in particular will start to explain the constraints that have happened on Aadhaar as a result of the Supreme Court judgment, right? And what the implications of that are for KYC, and maybe Arun will go into that as well. There are numerous applications of digital identity that have been used both by the so-called unified payment interface system and by the national, will go into how this is developed into a whole series of products, whether it's RuPay or Bharat Bills, etc. It all rests on the bedrock of Aadhaar plus a certain stack related to it. So what are the challenges to Aadhaar. Let me close there because this will be a segue point to how we can perhaps deal with those challenges. There are definitely challenges with regard to registration and updating, just if you took Aadhaar itself. Now, the government says, maybe the government is listening, the government says that 85% of people are covered. Now, even if you see people who are falling between the cracks, people who don't have physical documentation necessary to get Aadhaar, because the start point of entering the Aadhaar system is still some physical documentation. And some of that physical documentation includes things like birth certificates, in a country where birth certificates for large parts of the population just aren't there. There's also, frankly, an issue with regard to updating. For all the benefits and for all the progress that's been made, updating still seems quite cumbersome in terms of having to produce phone records, having to produce updated residential records, etc. Now, of course, there are concerns with regard to data privacy, and the Supreme Court judgment aside, which touched on it, maybe when we get to Arun's section, he will be able to help us navigate through that. Because if anyone knows what is going to come in the new personal data protection bill, it's Arun Prabhu. So that's definitely one aspect of it. And in fairness to people who are critics of digital identity, there have been government websites which haven't necessarily followed the encryption protocol. And there have been private companies that have used Aadhaar-based identity schemes, and it's been end run. There have been cases of that. So it's not fanciful. And in fact, in 2018, there was a website problem with a state-owned utility called Ippn, which kind of proves the issues related to this. I continue to remain a fan, a great fan of what digital identity can do as a bedrock issue. But I think to give us a balanced perspective on some of the challenges that I've referred to and how one can get through those challenges in a fast changing environment, I'd like to turn first to Anu Tewari, because the traditional way, Anu, in which we have looked at KYC has been through the lens of traditional banks and financial services institutions. But we know that financial services is going through a revolution itself in this country and globally through fintech. So what will that mean in terms of KYC and how we deal with digital identity in that context? Anu, it's over to you and your special views. My dear Anu, if you can hear me, you are muted at the moment. And so we can't hear your lovely voice. Or is it because for some reason your connection has snapped?
Like a technology issue, Arjun? Can we move to the next?
How appropriate in a technology session? That's quite okay. I'm sure Anu will come back, unless he was so horrified by my question that he decided to leave the panel, which I hope he hasn't decided to do. So Arun, maybe you can go next, because frankly, data privacy is on everybody's mind. Everybody is talking about what the new PDP bill will or will not do. How do we reconcile what the benefits are on digital identity with the concerns that people have on data privacy? And how is this likely to be navigated given the PDP bill? Please crystal gaze for us, Arun. Over to you.
Thanks, Arjun. And crystal gaze it is. Now, I was hoping coming into this when we proposed this panel that by now the Joint Parliamentary Committee, which has been very vocal and very visible, would have put out recommendations on their proposed amendments to the PDP bill. But as you know, that hasn't happened. In fact, their term has been extended to the first week of the monsoon session. That came out last night, and that effectively means that this can is now kicked down the road for a few more months. And whatever intervening developments there are, will potentially find their place in the deliberations of the committee, and potentially we will see more reports or more tweaks on what we've already is a very different bill from what was proposed originally by the Justice Sri Krishna Committee, which is the sort of author of it. Now, before I go there, they always say give the bad news first, and so perhaps it's kind of appropriate that I speak before Anu, given that to some extent, technology and privacy and the use of digital identities, the ability to rapidly validate and deduplicate information, the ability to identify patterns which are indicative of fraud or money laundering or terrorist funding, or all of these very, very important outcomes, which are well recognized globally, are obviously very significant. And Anu will obviously talk about how in a highly digital and yet highly dispersed economy with small ticket sizes that India is, this difference is often becomes a degree of kind rather than a difference of degree. The difference between doing something online and offline. It's often the distinction between being able to make something available or simply for it not to be practical and having large groups of people unserviced or unbanked. But that being said, with the upside aside, I want to talk a little bit about the downsides and the constitutional framework around how the balance is found. Um, any comprehensive, valid source of authoritative information about personal identity can be a tool for surveillance. Much like most other tools, the objective and the end use of that tool will often determine the impact it has, rather than merely the capabilities. Whether that is the ability to quickly scan your face and automate a payment, whether that is the ability to use your fingerprint to authenticate a transaction and potentially get somebody. And I was looking at this yesterday, get someone across the check-in counter at a hospital and do their vaccine by closer by about a minute and a half or 2 minutes, which over the course of 10,000 vaccinations a day actually makes a huge difference in terms of who gets vaccinated and who doesn't. Using the exact same technology for, say, recognizing who the dissonants are in a crowd, or to generate a financial profile of someone or a spending profile of someone and make some, and Thomas may get into this, but make some eerily accurate guesses about their beliefs, their religion, potentially their ability, or how they will react to a particular scenario. Now, the financial sector, much like insurance and to some extent healthcare, is really where the rubber hits the road, in terms of this balance. The availability of larger repositories of information which is structured by user and correlatable by user enables people to develop what are fairly sophisticated profiles of these individuals, and that can, for instance, in the financial sector, have a direct impact on their credit eligibility. It can, in the insurance sector, have a direct impact in terms of their ability to actually do their ability to actually get life-saving insurance coverage. Therefore, one of the most important sort of factors that we need to take in mind here is the outcomes that come out of this. And the Supreme Court, in the Puttaswamy judgment, actually came up with what is called a balancing test. The balancing between rights and obligations, and the balance between risks and risks and benefits, as far as constitutional rights are concerned, is not an uncommon exercise. And the court in Puttaswamy actually applied a very, very old three-part test, which we apply to these kinds of things. leaning on some very well recognized global principles of data protection and privacy, including storage limitation and purpose limitation. This, to some extent, may be an anathema to the financial sector in India, given the obligations around KYC, given the regulatory approach of sending you a notice 8 years down the line saying on dash of 2000, somebody bought something worth 500 rupees somewhere, tell us who this person is. And the general sort of approach of more data is better. The approach and the mindset of the financial sector in India has always been to gather and retain as much information as possible and use that information as much as possible to A, comply with statutory obligations, and then of course apply it to business obligations, which is not as much of a stretch as it tends to be when you don't have the data, or you have to do a fresh collection for it. Given that background, given those circumstances, the balance which has to be determined here is a combination of two things. The first, of course, will be determined by the PDP bill. The PDP bill, fortunately or unfortunately, relies on a consent-based mechanism largely, in order to obtain user buy-in and user participation in the usage of their information. Consent has to be obtained freely, fairly, and in case of financial information explicitly. And it has to be obtained on the basis of a privacy by design policy and a consent document, which will outline exactly how and for how long that information is going to be used and in what manner. There are obviously incidental and ancillary exceptions to this, where if there is something that's reasonably proximate, you can potentially expand to cover that using the same consent. But this consent always has to be free, fair, informed, and most importantly, revocable. Now, for those of you who are in the financial sort of space and are looking at concepts around, say, fraud management, risk management, credit scoring, etc., the ability to revoke these consents is potentially significant and very material. It undermines often the fundamental basis on which a lot of business is done in the space. And part of the solution, of course, is what is called reasonable purpose exceptions. For those who operate out of Europe and are used to the regime under the GDPR, which our PDP bill, if you squint at it right, kind of resembles, the exception for purposes, reasonable purposes like fraud prevention and credit scoring is well known. Now, these exceptions in Europe are obviously far more clearly stretched out. Here, there are potential exceptions, the parameters around which will be drawn by the relevant regulator, which is going to be a super regulator created under this legislation, the Data Protection Authority. So as is the case with many things, the devil will lie in the details. Depending on how clearly and how validly this authority defines these parameters, how closely this is linked with your existing framework of regulations under the RBI framework, including the recent RBI regulations on digital payment security, the recent obligations around the periodic obligations around outsourcing, and the general guidance that the RBI gives in relation to the maintenance of cybersecurity measures by either by payment system providers or by banks and financial institutions. The closer the Data Protection Authority aligns with this, the closer the potential exception that we're discussing is in terms of alignment with this framework, the more familiar this ground will seem. And dare I say it, the less useful some of the protections under the PDP bill will be. Because there is already a massive exclusion for requirements mandated by law. And if reasonable purpose is extended to include fraud prevention, and anything that is done fairly or reasonably in the interest of that is automatically excluded from the protections of the Personal Data Protection Bill, then effectively you're talking about a big fat safe harbor, which everybody else will have to align around. On the other hand, if they decide to do this with nuance and incorporate principles like storage protection and storage limitation and purpose limitation within this framework, and require entities to demonstrate that through their privacy policies, have these privacy policies validated by third-party agencies, give people credit scores and basically privacy scores, which will add on to their attractiveness or take away from it as far as customer-facing stuff is concerned. Then we may be looking at a new era in terms of how our financial information is collected and stored and processed in India. I dearly hope it's the latter, but the pessimist in me says that we may be aligning with the former. I'll pause now and hand back over to you, Arjun. And I hope I answered your question there.
No, thanks very much, Arun, for that traversing of data privacy and what it'll mean in terms of limitations. Maybe we can turn to Anu Tiwari, because Arun, you touched quite rightly on the fact that we have to be concerned, not just about privacy issues, but about issues of money laundering and terrorist financing and all of that that is under the FATF regime. And that's why there is a KYC regime there. So, Anu, views from you, please, about how we manage the KYC side of things relative to digital identity. Over to you.
Thank you, Arjun. Thank you, Arun, Thomas. Hope I'm audible.
Yeah, you are, absolutely.
Great. Thank you. So I was hoping to speak on the topics you roped in Arun to speak. So the topic you've given me, I'm a bit unprepared, but let me just start by just sharing some experience on this. 2016 is the year when I believe mid-March, followed by 12th July and 12th September, when the Aadhaar Act was made, provisions were notified. In the budget, they had talked about it, issued it, not sure with how much consultation in March. So let's just, I just want to spend 2 minutes discussing this legislation, because everything stems to flow from this, on this topic. I mean, the Jam Trinity, Jandhan, Aadhaar, mobile. So there are two worlds. And then, of course, 26th November, the whole demonetization moment coincided with this. So let's just break the world into two parts. Pre-2016, when anyways, there was nothing really different, very honestly, that was there in India. We still had PMLA, which required officially valid documents, OVD, which is the term for anybody to get onboarded by any company entity, which has to comply with PMLA. I mean, I'm not getting into telecom, that is its own, but that flows also, if you see, from PMLA itself. And every regulated entity in India, and there is a very interesting FIU order passed in December against PayPal, where FIU is alleging PayPal also ought to register under FIU. So who has to license and who doesn't itself is before Delhi High Court. And RBI has been called to comment on it. So we'll figure out what really is the ambit of the regulated entity. But assuming for a moment, anybody who is regulated by a financial services regulator in India, it's covered within the PMLA OVD definition. What did OVD have? OVD had all your ration, driver's passport, the usual old, minus Aadhaar. Aadhaar was included after the act came into force as a word within the definition of OVD. Now the OVD means, and why I'm starting from here is I'll end with the Supreme Court decision of September 2018, because that again was step 2. And that changed it. It gave us as a firm sleepless 1 year, because nobody knew what was eKYC starting from September 2018. So what the OVD language says is, if I have a ration card, or which is the public distribution for benefit of global audience, you can go to any government outlet and buy food and groceries, a passport or a driver's license, and it is absolutely difficult to get a driver's license in India. It's one of the toughest things. I mean, it's far easier to get one in the Western world, but in India, it's next to impossible. The number of tests one has to run, and nobody who is below 18 ever gets it. So I, as a bank, let's start with bank. This includes mutual funds, insurance, pension. I mean, everybody who has a license from any regulator is covered. I could go to the outlet and say, look, there are 5 heads in OVD. I will give one, and I can't be denied service. That's how the world worked till 2016. The only delta was it was not presence-less or paperless. It was paper, wet signature. I mean, as we speak, my spouse is, closing out a loan documentation where she's closing it without me, even in a paper world. I mean, I've told her, nobody will care, you just sign on my behalf. Anyway, signatures don't matter. So the point I'm making is, people would sign, nobody knew who's signing. I mean, exactly what is happening used to happen there, which was extremely inefficient. It made no sense. And what this led, and demonetization opened up the underbelly of the whole KYC system, because there were these incidents and all publicly reported to, so one can talk about them. Moti Bagh branch, in particular in Delhi, many such branches. I mean, there's a reason why it's publicly well known that nothing really was left unattended in terms of the old currency. Everything was surrendered, because, and these are all official documents. This is not it's all publicly known. I mean, what came out is there were accounts opened in the name of people who were dead or who didn't exist, who never existed, like your house help, your chauffeur, who didn't even know accounts were opened in their name. I mean, forget this. I could have opened an account in the name of somebody called Thomas Prabhu, and the person may not exist. And these accounts and all of this came out, and one just has to do desktop search. All this is before investigation authorities, so nothing is hidden in what I'm saying. Everything was, I mean, that's the allegation, that it all found its way to gold. And that just shook up the establishment, because, the whole bedrock of KYC, which is Thomas, you, Arjun, being who you are, claiming who you are, having an account in your name, just went out the window. Just imagine if there is somebody called Thomas Prabhu who doesn't exist, or if there's a name who is no longer alive and still the account is active. I mean, then the whole forget KYC, the whole global FATF, PMLA, I mean, CFT, all that just completely becomes irrelevant. So the moment, I believe, was not just Aadhaar, but actually the demon moment. Because, and before I go into the Supreme Court decision, and I'll just take one more minute, because I've been prompted that we are short of time. Not many people know the full name of Aadhaar Act. We all know it as Aadhaar Act. I'll just read out the full name, because this ties into the Supreme Court decision. Aadhaar Act is called Aadhaar Targeted Delivery of Financial and Other Subsidies, benefits and services. So Aadhaar was never really envisaged as a e-KYC act. It just happened to have this very cryptic section 57, through which industry drove a truck and a tank and an aircraft. To the extent that I remember going to visit a friend in 2017-18, and the watchman said, "Show me your Aadhaar, otherwise I won't let you in." Everybody, I mean, landlords started asking for Aadhaar, to the point that Aadhaar was everywhere. And funnily, and again, this is publicly available information. I mean, before democratic elections, there was controversies and raids and arrests made, where data on Aadhaar was harvested by unscrupulous agents. So today, honestly, I don't know, Thomas, more for you. I mean, Arjun, you've not been in the country for a while, so you've still not suffered. I mean, Arun, my and the host's data, Aadhaar number is everywhere. I mean, we don't even know where our Aadhaar number is and what it is being done for. So now let's go to the Supreme Court decision, which is an offshoot of Puthuswamy in a way. So what Supreme Court said is as follows, and I'm speaking from memory because Arjun, you've put me on the spot on this topic, is that they read the name of the act for the first time, which is not Aadhaar Act, that is Targeted Delivery of Benefits and Subsidies and Other Services, and said it is mandatory if anybody wants subsidies and benefits. Most important. So you cannot evade. You cannot say my right to privacy, I will not give it. You have to give it. They also said income tax, too bad, link it. So nothing doing. But the second part, and this is a 1600-page judgment. In fact, not very often we as lawyers now get to read judgments. But I tried to read as much as possible of this, and it was very difficult to figure out what is the conclusion, even after a few reads. Because the topics were very nuanced. So then I figured I'll read summaries coming up in media and use them for client updates as opposed to trying to create one, because it just was very difficult to figure out the conclusions. And what happened is there was a review of the judgment in January or February this year. The Supreme Court review bench said nothing doing, that's a good judgment. So at least I still don't know what is the conclusion in the old judgment, because at least with the review they had summarized what the old judgment said in a page would have been easier. Uh, but also, I mean, not to belittle the point, it is a very difficult topic. So the conclusion actually is in the last 2 pages. If you see, it's all over, but the last 2 or 3 pages summarize to the extent it's possible, because it's not an easy topic. Because there were 10, 12 constitutional issues involved. I mean, just imagine last 30 years of jurisprudence on right to privacy, which stems from Article 21 and Article 14 in a bit. And these two are the most difficult, not difficult, most challenging sections for any jurist, both. I mean, I can't comment on the bench, but bar in particular, because, it's probably what led to the whole PIL revolution. It led to some of the greatest judgments in the Indian history, in terms of liberty, equality, privacy, food, free hospitals, medical treatment, everything that today we have and take for granted, has been read into 21 and 14 over the last 30, starting with the famous Justice Krishna Iyer and Justice Bhagwati's, when on a postcard they would accept PILs. But to come back to the decision, at least my limited reading, they then went on to not read down, strike off 57, because 57 had a very cryptic 4 words, which said that if contractually you agree, you can give Aadhaar for anything. I mean, that effectively made something which was a right of the state to a right between two parties, which is why the watchman example I gave, going to meet a friend, said, show me your Aadhaar, otherwise I wouldn't let you in. It was a Bandra society. So I guess Bandra, it all is possible. They said all this is rubbish. You cannot be asking for Aadhaar for everything and anything. So they started by saying bank accounts first. You cannot make Aadhaar mandatory. They said school admissions, you cannot make Aadhaar mandatory. Class 10th and 12th board exams, Aadhaar cannot be mandatory. Aadhaar is only mandatory if you want state subsidies. Of course, tax linking of the Aadhaar. It's not mandatory. It has to be linked compulsorily. Now, what had happened is, start from 2016 to 2018, 2 years, there was a business model that got created with thousands of companies which started offering eKYC services. Not just on the buy side, but also sell side, but also buy side. Insurance, mutual fund, banks, I mean, all of the fund management entities started accepting I mean, we set up many of those programs. I recall we had set up AMFI's eKYC policy for the entire mutual fund industry. I really wish fortunately they may not remember and come to us as to what we said. But it just became a chaos. So, and the people who suffered the most, unfortunately, were not the Indian ecosystem owners. It's the clients, at least I faced, who was in, say, Japan, in Australia, in Denver, in Singapore, in East-West Europe, because they had taken punts on India. They had taken bets. And it really, and in hindsight, it was a bad punt, because they all tried to get too adventurous with Aadhaar, thinking it is the be-all and end-all. And nobody really understood that Aadhaar could result in false positives. What Aadhaar does, and it is not US Social Security code, or like how it happens in Europe. I cannot punch in and know your criminal history, your pop's name, your dog's name. All it does is confirms that if you are claiming to be Thomas, you are Thomas. I mean, because of the fingerprint. Because the problem in the earlier world was it was paper. So, Arjun could take your paper and claim it is you and get whatever was required. But I have to put in my eye scan, my fingerprint. So that's why it's called unique. The first word of UIDAI is unique because it is unique to you. You cannot, loopholes, the whole jugaad culture, I won't comment. But there have been 10 sunnies who've got an Aadhaar, and I recall some article where somebody's pet dog got an Aadhaar number. So, leaving those cases aside, still the idea is you've got to punch in your fingerprint and your eye scan. So I'll just pause here, just to, I've drawn a bit of and again, I wasn't prepared, Arjun. I was hoping to talk on some of the other topics. But just to trace the history, what happened and why it happened, and when people crib cry about Aadhaar and EKYC, I try to just remind what Aadhaar was and where it reached, and how the brakes had to be shut on Aadhaar, at least by the highest court of the country for a reason, given how, I won't use the word abused or whatever it became, but the reality is it was a free for all.
No, thank you very much. I mean, for somebody who wasn't prepared, you gave a fantastic review of why we got to where we got to in the 2018 judgment. There's a background to it, there's a reason for it, there's a history to it, and these are the kind of limits of, we started hitting the limits of digital identity through Aadhaar as a result. So Thomas, you've heard the three of us speak, enthusiastically about digital identity and critiques on how far it's rolled out. You've heard about the concerns on data privacy and the issues on KYC and the balance we're trying to achieve here. What's your view on how this is playing out in other countries, Thomas? And indeed, if you have views as to where you think this is likely to go for us, that would be very, very welcome. Thomas, over to you.
Sure. Thanks, Arjun. And yeah, I would say most countries are not ambitious as India to build a national system run by the government, and what you're struggling with is a leading situation, because privacy has now come to the forefront everywhere. And where countries have left it to the private sector to do everything, they might have now be wishing that they had a little more control. But it's a large burden, for the country to build a system like Aadhaar, and many countries don't seem to be able to do that. And of course, I think the main point is that digital identity is going to be required in the digital world. And, people aren't required to participate in the digital world. And we do need to create safe places where people who don't want to go digital don't have to. But if you are in the digital world, you will have to have a digital identity. And I also think that it's widely varying, and it will always change. There's not one form that's always going to work. And the, identity is a diffused concept. So I worked with the UN High Commission for Refugees, and they said, when refugees were trying to escape into, their conflicts and migrate into Europe, when they're crossing borders, the border guards would force them to open up their Facebook account and show them who they are, because you couldn't lie, about who you are if you're showing your actual Facebook account with, all the posts and who you're talking to and what you're talking about. So, the concept of identity has to be somewhat scalable and fluid and has to vary. So I think, the KYC rules where, if you're going to get a phone account, you don't have to have as strong of rules as if you're getting a bank account, or if you're getting a payments account with a small balance, you don't have to have as strict, identity requirements. These are all leading practices, and I think fairly easy to implement. But it's going to continue to advance, because we had the same thing in the United States, where when the Social Security system was implemented, to qualify for the social benefit, you had to have a Social Security number. But it wasn't required by law. And a lot of people did refuse to get one. And then they find later in life, there was a real pain for them because they didn't get one. And now they need one because everybody got used to it and nobody cares anymore. So there is a thing about these systems getting better over time, and people getting used to it and realizing that, it does make things better. And as long as it's handled by the government appropriately, it can work out successfully. And I think what you're seeing, now that people don't often realize is that a lot of the biometrics and the real making identity work on a transactional basis comes down to technologies, like what's the sensor that's reading your thumbprint or iPrint. And a lot of these things are going to be built into the devices that you're carrying. So, if you have a smartphone, you have that smartphone actually can identify you through biometrics in multiple ways. And you're kind of trusting the operating system and the whole phone system to carry your identity. And that can be done in a way that's fairly robust and private and will evolve. And then if you lose your phone, you can always, get it back again, but if you trust your fingerprint to some other, entity and they have it, and then they can just use that to claim they're you, that's actually a problem. So I think some of it's about the design, like in your smartphone, you're not giving your fingerprint to your MNO or to the smartphone manufacturer. It's really inside the phone. And if you lose it, you have to reset it back up again, but it's not like you lose your identity. And so these systems take a while for people to understand and get comfortable with. And then when they do, then it changes because something else comes along, so it's never going to be satisfied or never going to be fixed, because there's always more and more sophistication in terms of identity. And I would say, the United States is way behind in terms of digital identity, but, you just have this situation where if you go to your bank account and they're trying to prove who you are, you have to answer all these questions, and, they really never know if they got you on the phone or not, and it's kind of bizarre, but I think that's one of the things that Aadhaar puts you in a position where at least there's that, it's not going to be the be all end all, but at least it is something that, that is fairly widespread and fairly robust. So it's a nice thing to build on. I agree these questions about where it should be used and where it shouldn't be used are valid. I think that what we're seeing right now, the resurgence of people caring about privacy. And I think the big thing to watch is what's happening between, with internet, with the GDPR, and now with Google basically following Apple's lead and saying, we're not going to do third-party ad tracking online. This is a big deal, and I think people are realizing that they just don't want all their information flowing around, and they're actually starting to do something about it. And the big rivalry has been, Apple Computer, because they don't make money selling your identity. They've taken the high road because they can, because they don't make money off of that. And they're kind of forcing the Googles and the Facebook that basically their whole model is basically owning your identity and selling it. They're having to change their practices. And that's really the place to watch. And in the finance sector, you have you're in a better situation because you have more regulation and more protection. And watching the ad world, you can see the future happening in front of you, and it's happening fast. So there's a lot of ways to think about this, and I think in the financial sector, because of the regulatory situations and the protections, it's easier to make things secure. But it's on the other side where all the action is happening.
Thomas, thank you very much for that perspective, in particular, what happened with Social Security and how it's evolved. I have to say, Arushi, the panelists have been great. The moderator has been less great because we have run to the close of our time. So I will defer to you as to whether or not we can take any questions or not. Archie, over to you.
And Arjun, just if I could take 10 seconds, just 10 seconds. I missed one very important, and I'll not be more than 15 seconds, I promise. I missed the period after September 2018 to end of 2019. What happened after the judgment? Because it was chaos, and two things clearly came out basis amendments to the Aadhaar Act and amendments to all the guidelines. Firstly, and I think it's important for the audience and everybody to know, because it's not widely well known, nobody can ask now for your Aadhaar number. You can give them, you back to pre-016, which is the criticism, so to speak. But anyways, if that second is nobody can, if anybody is found with somebody else's Aadhaar number, which is why it led to the whole proof of possession of Aadhaar construct which came out, not Aadhaar itself. If anybody is found with in possession of somebody else's Aadhaar number, just imagine the implication of what I'm going to say. There is an imprisonment term under, I believe, section 18 or 22 of the amended Aadhaar amendment, which came out after the Supreme Court decision. So what this led, you can imagine, is a mass scraping exercise for at least the clients who cared about, not going to the jail. Because imagine a bank teller, cannot now accept, you cannot give him your Aadhaar copy and the person cannot take a copy of it. It has the number, which is why UIDAI, to again reinstate the issue with digital lending, because the entire digital lending wave in the country was created by Aadhaar.
Well,
so they kind of reinstated by saying you can just download an XRP file from the website, which has everything but the Aadhaar number. So just wanted to flag this, that if anybody asks for a number, give them and just record the incident and report it.
Very, very important aspect. Thank you for completing that out, Anu. Arushi, over to you.
Yeah, thank you, Arjun. We have made an announcement. Anyone, please, if you have questions, please type it on the Ask a Question box. We'll just push that from the back end. But as of now, we don't have a question. So
Arjun, as ever, you've been comprehensively clear.
Yes.
Nobody has any questions at all.
Or too confusing, Arjun, or too confusing for the audience.
I didn't say that. That was Arun Tewari.
We got away scot-free, but listen, fantastic conversation and one to be continued as the PDP bill goes over the line, as we see new forms of lending emerge. Anu, had he had time, might have spoken to us about what will happen on cryptocurrency, for example. So there are many sort of iterations beyond where we are, and so this is a fascinating topic. Arushi, thank you very much for having had us, and Thomas, thank you for joining from the West Coast. Much appreciated.
Thank you.
thank you so much, Arjun.
Thank you for the
It was an
opportunity.
amazing discussion. You started with digital identity, you covered privacy and the financial sector, and it was really very well weaved. And thanks to all the experts, Anu, Arun, and Thomas, for your views, and to Arjun for actually, taking this up so well. Thank you so much, everyone,
Thank you.
and for your participation in IPP. Thank you once again.
Take care.